Danielle Damianov, and I'm here to talk to you about how to purchase a home with the all-in-one loan. So whether you're looking to purchase a primary residence, second home, or an investment property, the all-in-one loan is, in my opinion, the best product out there. There are so many valuable tools that this product has to offer. So let's talk about the all-in-one loan and how you can utilize it for a purchase. So first, the all-in-one loan is the only loan that allows you to pay principal first and interest second, saving you tens of thousands, or in some cases hundreds of thousands of dollars in interest over the life of the loan. It also allows you to pay off your home in record time, sometimes in as little as 5 to 7 years, without having any additional changes to your spending habits or making any additional mortgage payments. And we're going to talk about how that works. It also allows you to have access to that equity at any time. So the all-in-one loan is a home equity line of credit combined with a sweep checking account. So when you get your home loan, you're also going to get a checking account that's combined with the mortgage. So what you want to do is make sure that all of your income is getting deposited into the checking account that's combined with your home equity line of credit, because every single day, the amount of money that you deposit into that checking account is going to sweep over onto the principal balance on the mortgage, paying down that principal balance, and then the interest at the end of the day is calculated on whatever the balance is for that particular day. Now, people have asked me before, is there a fee for it to sweep? And the answer is no. There is no fee, because whenever you're depositing money into that checking account, it's automatically sweeping onto the principal balance of the mortgage. So let's just say there was a fee. That would totally counteract the whole entire point of this loan, which is to save you money. So whenever you deposit money into the checking account, it's going to automatically pay down the principal balance of your mortgage. The interest is calculated every single day. At the end of the month, it's going to total up all of those daily interest charges. And then on the 20th to 25th day of the following month, it's just going to tack the interest back onto your all-in-one loan, or back onto the principal balance. So you're not actually even making a mortgage payment every single month. What you're doing is you're going to deposit your income into the checking account and other things that we'll talk about in just a second to keep your balance down. Now, you're also going to use that checking account just as if you would use any other checking account to pay your bills, to pay your car payment, to pay, go on vacation, whatever you want to use that equity for. You can use it for anything at any time. It's just like a regular checking account. So let's say that you are purchasing a home for $1 million, okay? With the all-in-one loan, now in some instances, the loan to value will be less, but let's just say it's 80%, okay, which is the standard. So you have to put 20% down on $1 million home. Your loan amount is gonna be $800,000, okay? You're gonna get your checking account, and let's just say that your monthly income is $20,000 a month. So every single month, you're making $20,000 a month. You have direct deposit. You're going to direct deposit your $20,000 into the checking account, which is your income, into the checking account every single month. And then that $20,000 is going to go and pay down the balance on that mortgage. Okay, so your $800,000 loan balance now just became $780,000 when you deposited that $20,000 in there. Now, let's just say that you have a car payment of $700 and your Comcast bill is $150, and your spending per month is $1,000, okay? So all of that throughout the month, this $780,000 is going to fluctuate. And every single day, the interest at the end of the day is going to be totaled on whatever the balance is for that day, okay? So this will go up and down. So let's say it goes from 780 to 785. Well, then the interest will be calculated on the 785. And then maybe it goes down to 783, and then it goes up to 790, okay? As long as you're saving some money every month. Typically, it's going to be at least 10%. As long as you positively cash flow every single month and you do not spend every dime you make, because if you spend every dime you make, this loan is not for you. But if you don't and you're positively cash flowing every single month, this is the loan for you, because not only will it save you tens of thousands of dollars in interest over the life of the loan, it's going to allow you to pay off your home loan in record time. But the best part is that you still have access to the equity. So if you pay the balance down, let's just say to $400,000, you now have $400,000 in equity that you can use, and it's a 30-year term. So you have that $400,000 to go buy another investment property, to go put more money in the stock market, to go on vacation, to pay for your kids' tuition, for college, for their primary years in school, to buy a new car. Whatever you want to do with that money, you can do whatever you want, because it's your money. It's almost just like money sitting in a checking account, only it's sitting in your mortgage, keeping that balance down. Now, let's take this a step farther. Let's say that you have a checking account, another checking account, and you have about $40,000 in that checking account. You want to move the $40,000 into your all-in-one loan, because the $40,000, it's sitting here doing nothing. It's just waiting to be spent. Where if you put it in here, it's paying the principal balance down on the mortgage. So when the interest is calculated, it's calculated on $40,000 less than what it would be calculated. So this is either going to sit in a checking account and do nothing for you, or you can put it in your all-in-one loan and save so much money in interest. Same thing with a savings account. Let's say you have a savings account and you have $100,000 sitting in a savings account. That's not doing you anything. That's not making you any money. Okay, it's just sitting there waiting for an emergency, waiting for a rainy day, right? So you're going to put it in your all-in-one loan so that $100,000 is paying down the balance on your all-in-one loan. Let's say an emergency arises, okay? And someone in your family gets sick and you need that money, you can take it out at any time. There's no penalty. That's what it's for. So another thing that could happen is, let's say, God forbid, you lose your job and you're out of work now for 6 months. As long as you don't get back to that $800,000, you don't have to put anything else into this account. It will be tacking the interest on every single month. So yes, that interest is going to grow and the balance is going to grow. But if God forbid you lose your job, you're not going to have 30-day lates on your credit report because you haven't made a mortgage payment. As long as there's equity between your balance, your loan balance, and what you actually owe, or your total line of $800,000, as long as there's equity there, you don't have to make a mortgage payment. The interest is going to tack on, but you won't be 30 days late on your payment. So God forbid something happens, or maybe you're on straight commission and you have a couple of months with no sales. As long as you have that equity, you're fine. There will never be a 30-day late on your mortgage payment. You just have to make sure you're not going to go over or exceed that initial draw or that initial line amount, okay? We're going to take it another step further, because I have a lot of people come to me and say, you know what, I have a home up north in Massachusetts and I want to buy a home in Florida, but that home in Massachusetts is not sold yet. I might not sell it for another 6 months to a year, okay? You buy the home in Florida as long as you qualify for both properties. When you sell this home, you can take the $400,000 and pay down the balance on this mortgage. You may even pay it off to zero, okay? So maybe this $800,000 is now at zero. You owe nothing on it. You don't have to close the line. You're not making you're not being charged any interest, and you have up to the $800,000 to spend. So if you sell another home, take the proceeds from that sale, put it down on the all-in-one loan, And that will save you, once again, tens of thousands or hundreds of thousands of dollars in interest, but you still have that available equity. Where if it was a straight conventional loan, if you took $400,000 and put it down on a conventional loan, yeah, your loan balance will go down, but your monthly payment didn't change. The interest that you're paying did not change. The only way it would change is if you did something called recasting the loan, which is a process. Not every lender allows for it, and there is a fee to that. So with the all-in-one loan, there's no prepayment penalties. You can pay it down, pay it off, use it again, do whatever you want with it for the 30 years. It's the best loan product out there. It can be used for a primary, second home, or investment property. We can go up to $2 million. Now the loan to value up to $2 million is going to be less. There's no mortgage insurance, okay? Well, obviously we're at an 80% loan to value, but there's no mortgage insurance on there. And we don't have to worry about jumbo loans or going over a conforming loan limit, because it doesn't matter. It doesn't matter with the all-in-one. You could be at $900,000. It's not considered a jumbo loan. You're doing the all-in-one loan, which is completely different. So these are all of the great possibilities that can happen with the all-in-one. This is on a purchase, 20% down on a purchase for the most part. The interest is a 1 month adjustable. So I know that freaks people out right now, especially in a rising interest rate environment. So 2 things I have to say on that. First of all, we do have a 3-year and a 5-year fixed option. So if you want to lock it in for 3 years or 5 years, we have the option to lock it in for 3 or 5 years. I personally have this loan on my home. I did the 1 month adjustable. Has my interest rate gone up over the past couple of months? Absolutely. But I'm still paying so much less interest because all of my money is going into the loan. So if I pay a higher interest rate on a lower loan balance, I'm still saving a lot of money and a lot of interest, even if I had a lower fixed rate, but it was based off of that higher loan balance. So for example, if you pay, 3.5% on $800,000, your payment is going to be a lot higher than if you're paying 5% on $400,000 or 5% on $600,000. It's going to be a lot less. So you're saving so much more money in interest over the life of the loan. You always have access to that equity. You can move funds from your other accounts into this loan. The checking account works exactly the same way as it works on with a regular checking account. You'll have your debit cards, your ATM, your credit cards, bill pay, direct deposit, all of that. Okay, so the all-in-one loan is the best, in my opinion, loan out there for people that cash flow, number one, that want that flexibility, that want to be able to tap into that equity for other investments, other opportunities, and then also have that money for emergencies, okay? And you can pay the home off in sometimes 5 to 7, maybe even 3 years, depending on how much money you have in other accounts. So that is how you can purchase a home using the all-in-one loan. If you want more videos like this popping up on your YouTube or in your email, please hit the like button and subscribe to my videos. I am all about the all-in-one loan. I'm here to help you create generational wealth so that you can leave a legacy for your family, get your homes paid off, and use the equity for other investments. My name is Danielle Damianov. Click the like button, and I promise I will come with more videos to help show you how to use the all-in-one loan to make more money for you, your family, and live the life that you were destined to live. Thanks so much for watching. Bye.